So when anybody talks about how unemployment is low and they compare it to what unemployment was in the 70s or the 60s, it's apples to oranges. You can't make the comparison. The only way you can do it is the way I'm doing it. You have to compare the current U6 number to the old headline number, the official number. And even that is an apples to oranges, but it's closer because back then, U6 included all the disgruntled workers, no matter how long they've been disgruntled, right? Even if they've been, I haven't looked for work in 3 years because I'm so disgruntled, they still counted as unemployed. But now, after you've been disgruntled for a year, you drop out of the U6. So even these numbers are too low. But if you just take it at face value, today's U6 number, I look back, 7.8%. There wasn't a single year in the 52 years between 1942 and 1994, 52 years, not a single one of those years ended with an unemployment rate as high as the one we got right now. 52 years. Now, it was a little higher in 1940, 1941, because we were still in the Depression, right? So other than the Depression, the Great Depression, those 52 years, every president had lower unemployment than Biden. So how can he claim that he's got this really low unemployment? How can Powell say the economy is great because the unemployment rate is low, when if you look at the real unemployment rate, which still isn't real, U6, it's high. It is historically high. We have right now a historically weak labor market and high unemployment rate. And the inflation rate is also high, especially if you measure it the way we used to measure it in the 1970s.
Recent data reveals a grim picture for the US economy. Factory orders have dropped by 3.3%. Manufacturing lost 9,000 jobs last month, and the sector remains in recession. Peter Schiff highlights that the U6 unemployment rate, when historically adjusted, shows a labor market weaker than any time since the Great Depression. At 7.8%, this rate is higher than in any year from 1942 to 1994, challenging the narrative of economic strength. With inflation rising and the misery index at levels not seen since the 1970s, Schiff warns of a looming stagflation crisis, reminiscent of past economic turmoil. Compounding these issues, construction spending has unexpectedly fallen by 0.3%, and the Dallas Fed Manufacturing Index shows a sharp contraction at minus 17.5. Most concerning is the national debt, which has now surpassed $35 trillion, a topic notably absent from recent Federal Reserve discussions. Under President Biden, the national debt has increased by $7.2 trillion, potentially surpassing records set by previous administrations. Schiff argues that this unsustainable debt trajectory, combined with weak economic indicators, signals a potential collapse. Are we on the brink of a debt crisis that could rival historical financial turmoil?
I would say that the misery index, which is the combination of unemployment and inflation, is higher right now than it was for the majority of the 1970s. Not the latter part. The Carter years were still a bit worse. But the earlier years with Ford and Nixon, it's worse now under Biden. And that was a stagflation a decade. So we've got it. The data supports it. And the markets, investors are slowly starting to cue in. Looking at some of the other numbers, manufacturing added 1,000 jobs, no big deal. Last month, they lost 9,000 jobs, a little bit more than they first told us. Labor force participation did tick up to 62.7, but average hourly earnings only rose 0.2. They're supposed to rise 0.3. Year over year, they were up 3.6, so people not making as much. And the work week dropped from 34.3 hours to 34.2 hours. It was a very weak report. We also got a report on factory orders, which were down 3.3%. They were looking for a drop of 3%, so they were looking for a big drop, and they got a even bigger drop. But again, manufacturing is in recession. It's been in recession for almost the entirety of the Biden presidency, and you can see that, in the Intel earnings, or what we saw with even Amazon is showing that the consumer is headed there. I think he's already in one. The ISM number that came out yesterday, ISM manufacturing, another big miss. They were looking for a weak number. They were looking for 48.8. They got a much weaker number, 46.8. The only thing that was strong was the prices paid. It was a hot inflation number. That's what spooked the markets when it came out yesterday, because we got a weak economic news and we got weak news earlier in the day, and then all of a sudden we got high inflation. Well, that's what we're going to get because we got stagflation. The economy is going to keep getting weaker and inflation is going to keep getting stronger. Construction spending, another drop. They were looking for a rise of 0.2. We got a decline of 0.3. Nobody expected a negative number. And in fact, they revised the prior month from down 0.1 to down 0.4. And what else did I look at? Dallas Fed manufacturing was supposed to be weak, was supposed to be minus 13.5. It was weak, minus 17.5. Nobody thought it would be that weak. The weakest anybody thought in the consensus was 14.2. So we had a week of weak economic data capped off by an even a weaker jobs report. And now there's a lot of pressure on the Fed. Now a lot of people are talking about a 50 basis point rate cut in September. I was talking about it last week, and I thought they would do it potentially in July in the meeting we just had. I think they may end up having to do an emergency intra-meeting cut of 50 basis points, which they'll look like complete fools if they have to do that. So believe me, they don't want to. They want to wait until September, but they may not be able to if the markets keep tanking, right? So they're going to have to do something, but they're going to have to, try to find a way to sugarcoat it. But, they should have moved when I said, not because it was the right thing to do, but given that I know what they're trying to accomplish, they should have done it. They would have had, silenced some of their critics in the short run who don't really know enough to criticize them for the right thing anyway. Everybody thinks, the Fed waited too long to cut. No, they waited too long to hike. In fact, they never should have cut. They never should have put rates at zero, but they did, and now they're in a very difficult situation. The businesses that already exist are barely hiring anybody or are laying people off. That you'd have all these new companies starting up in the same month, hiring all these people, makes no sense at all. Again, they still think, the statisticians that are computing the birth-death model, they all think the economy is great. And so they assume that new businesses started up. If they actually realized how weak the economy was, they would assume that existing businesses are closing down. And so the birth-death model would be showing jobs or businesses dying, not being born. So these numbers are way, way off. No movement at all on interest rates. Powell missed the opportunity to look like a genius in the minds of many by cutting rates in advance of this weak jobs report and this big stock market sell-off. In fact, had he cut rates, maybe the stock market wouldn't have had as big a sell-off. We'll see, but he didn't, and it did. But the most interesting thing this time about the press conference, to me, wasn't what was said. It was what wasn't said. There was no talk at all whatsoever. Nobody asked Powell, nor did Powell mention the national debt, which just a few days before this press conference rose above 35 trillion. That is the first time that that's happened. That's a big number. And yet it didn't even come up in conversation with the Fed. Nor did they talk about the balance sheet, which obviously relates to the national debt. That wasn't even mentioned. Nobody asked the Fed, and Powell didn't bring it up. He didn't discuss it. But, to put the national debt in perspective, so Joe Biden's been president for 4.5 years. And during those 4.5 years, we've added $7.2 trillion to the national debt. Now, he is on pace to beat Donald Trump and set a record for the most debt added by one president in a single term. But there is an outside chance, depending on how quickly everything collapses, that Biden just may add more debt in his one term than Obama did in two. I don't think that's going to happen, but it isn't outside the realm of possibility. But I do believe that regardless of the outcome of this election, whoever wins, and I'm thinking it's going to be Trump, but they're really selling Kamala Harris hard right now, right? All the people that said Biden was sharp as attack, now that, she's the greatest thing since sliced bread. And, the Republicans are just weird, right? There's no other way to describe them. They're just weird. Their ideas are weird. They're weird. That's pretty much the script that they're all reading from. It's just amazing that they keep doing this and the public buys it. But whoever wins, I think that president is going to beat the record of the prior administration as far as the amount of debt that's going to be added, because these records are going to keep being broken because we are on the verge of a debt crisis in the United States.